I'm Owen Bigland. This is the Inside Edge video blog. Okay, it's spring 2021. Just give you a couple of stories from the front lines here. You know, the market continues to be very active, a strong seller's market. I've been talking about that all spring here and earlier in the winter as well. So I'll give you a couple of stories from the front lines here. And I just want to put things into perspective as to where the Vancouver market is. We'll talk about downtown Vancouver here, but we can touch on detached market as well. I just had a sale of a townhouse. I was the listing realtor, a townhouse downtown Vancouver. Really nice townhouse, kind of a special unit, 2 floors, very good condition, quieter location. There's only 4 of these particular townhomes in this development. It's part of a tower that has these 4 townhomes at the base. So very good product. Love selling these. You know, I knew we were going to get a lot of interest in this home, and I did. I ended up with about 28 showings over the course of 5 days on it. Looked at offers the following week. Ended up with 6 offers. Ended up in a pretty crazy bidding war between a couple of parties offering on this, revising the offers many times, all subject free, of course. Make a long story short, this unit ended up selling $160,000 over asking price, new all-time high. Actually, the last comp to this townhouse had sold about 4 years ago. There's not a lot of turnover with these. But we're talking just under $1.3 million. And so new all-time record-setting price. My sellers are very happy, over the moon with that kind of over asking price. And everything's great. But I want to look at it from the buyer's perspective, though, as well, because a lot of people would say here, and I even see sometimes realtors say, when they're in bidding wars and they lose out, well, the buyer overpaid for it. We tried to buy it, but hey, not our fault. People were that crazy and bid that kind of price. Maybe not. I think in the short term, maybe that might be true. But you don't know what this buyer is, what their intentions are. I can tell you, for this particular unit I sold, I know this is their dream home. They've been eyeing up this location for a long time now. And as far as I know, in the brief conversations I had with them, they're looking to make this home for the next 10, 15, 20 years or more. They love the area. They both work in the area. It's a nice home. So, I think when you look back on this home, if they keep it for 20 years, that $1.3 million is actually going to look pretty good. Because I often say, real estate, if you give it time, a lot of magical stuff will happen. In the short term, anything can happen. This townhouse could easily drop 10% next year. Who knows? It could be worth 1.1 5 years from now. But I can say with pretty much certainty that, and my rule of thumb is every 20 years, that home will double. And I use very conservative numbers with that. That's an annualized rate of return of probably under 3%. Because real estate, will generally at least keep pace with inflation, not lockstep, but over time it will. And they're just not building any more land. So I could easily see this house, this townhouse being worth $2.6, $2.7, $2.8 million 20 years from now. And I'm probably being conservative on that. Now, here's where a lot of people will step in and say, Owen, you're crazy. You really think that home is going to be worth $2.5, $2.6 million in 20 years? Yeah, I do. Do the math on it. Most of them don't have a calculator and can't really think, 1 year ahead, let alone 20 years ahead. Do the math on the annualized rate of return. Past history is no indication of future returns. But I can tell you that Vancouver Real Estate has done far better than double every 20 years. But again, we've had some incredible years. Often, too, what happens in real estate, and you're seeing that play out in the detached market the last year or so. People are going, great, wow, geez, these prices are nuts. We're seeing $200,000 price increases from what a home sold for 6 months prior. And yeah, but that's nothing new. This is the way it's been for the last 30 years. Real estate tends to go, just like the stock market, tends to go in these wild, jolts up. And then it treads water for a little while, maybe, gradually does a descent of 5 or 10%, then takes a big 20 or 25% jolt up in a matter of 18 months. That's generally how, especially the detached market, in my experience, tends to go. But if you take it out over 20 or 25 years, the graph on detached and condos, you'll see a nice slow ascent with dips along the way. But, people will often say, well, that's crazy. There's no way that townhouse is going to be worth 2.6 or 2.7. Yeah, it will be. Do the math on it. But just the last thing I'll say is if you put it into perspective, people will look at real estate in Vancouver. And I've done many blogs and I've talked about it in my book. One of the catalysts for my book was that story in the Globe and Mail, that envy story, that bitter, envious story about the Kitsilano homeowner who bought the home in the early 80s and fixed it up and put in a suite and then retired from working as a baggage handler at the airport and paid $280,000 for the house in the 80s and sold it for $3 million, and how he was so, that return was outrageous and he wasn't entitled to those gains. Well, of course he was entitled to those gains. That's what real estate does if you buy and hold a house for 30 years and make improvements to it and add a secondary suite, a basement suite. That's what's going to happen. Do the math on the annualized rate of return. But if you really want to be shocked, if that's shocking you, what Vancouver Real Estate does, which is slow and steady, and they're nice returns, don't get me wrong, but they pale in comparison to some of the returns you can get in the stock market. Have a look go onto Yahoo Finance, go into Seeking Alpha, go and take a look, go into TD Waterhouse and play around with the numbers on what companies like, let's say, Apple have done. Apple over the last 10 years isn't up 100%. It's not up 200, 300, 400, 500. That's nothing. Apple is up probably in excess of 1,000%. I mean, you could go on and on. I mean, I saw the chart on Shopify not long ago. Shopify, the Canadian e-commerce company here, Shopify is up 1,700% in the last 5 years. But, that's a high-flying tech name. I can tell you just boring companies. Let's take, for instance, FedEx. FedEx I've owned for a lot of years. I was buying on the dip last spring during COVID. I can tell you I'm up over 100% in the last 10 months on my FedEx shares. Same thing with Estee Lauder, Home Depot. I mean, if you were buying the dip and buying Canadian banks, they don't get more stodgy and more conservative than the Canadian banks. If you bought last spring TD and Royal Bank, you're up almost 100% now with the dividend. You've doubled your money in a year. Here I am talking about a townhouse doubling in 20 years, and people are outraged by that return. That's what real estate's going to do. The nice thing about real estate, of course, though, it's tangible. You can't live in your stock portfolio. So real estate does double duty. It's going to provide a roof over your head. You're going to enjoy the home, and then it's going to also be a pretty nice investment over time, especially if you buy the right home in a city like Vancouver. But that's what real estate will do in the long term. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.